Start. Okay. Good evening, everyone. So we'll be discussing the articles from Indian Express today. The headlines is about India-China summit, and if I have to sum up the entire summit and the background behind it, maybe this article can also be covered in the same thing. So, what is this summit about? Both India and China, the leaders of the respective country, met on the sidelines of the SEO summit. So, what is happening there? In the backdrop of the ongoing conflict with US, the trade wars, as well as the ongoing wars in the Middle East, Russia-Ukraine war, all these uncertainties are happening, right? So, in that summit, there is only one point that we have to take away. The statement of our Prime Minister, which communicates our intent. We don't treat China as a rival. We treat it as a partner, a civilizational partner. In reality, what is happening? On the ground level, we have border conflicts with China. So that is the only point that you can take away. There is nothing substantial that has come out of this. That's all. Okay. Now this is an important article, undercover of trade deficit. So this has a slight context of economic theory. I will try to explain that theory, the logic behind it, and I have a slight disagreement with the writer. Okay, so I will explain the entire logic. You can understand the concept there. So the concept here is about trade deficit. Okay. So to understand this article, you will have to know the concept of trade deficit. So what is a deficit? What is a deficit? Let's say in the case of trade, like you are importing imports and exports. So if you have a deficit, it means that you are importing more and exporting less. Now, with respect to the US, a prelims level question: does US have, before the imposition of this tariffs, do they have trade surplus or deficit with India? Right. So imports are more. Now, Donald Trump, the President of the United States, is projecting this as a loss because we are losing revenue, according to him. US is losing revenue. This is the context. So the understanding of this article comes from this conceptualization. This article writer says that when you look at trade deficit only as a mechanism for revenue earning, you are losing the comparative advantage that you have. Don't just look at it from number perspective, look at it from a strategy perspective. Now what does it mean? Let's take a classic case of globalization. Where does trade actually become more and more relevant? In a world of globalization where the only metric is efficiency. What do I mean by this? Let's say, for example, if US is good at manufacturing, let's say, aircrafts, and India is good at manufacturing, let's say, textiles, garments, or anything that India exports like gems and jewelry. So, economic theory and the concept of comparative advantage is wherever you are, in whatever sector you are good at, capital will flow towards that sector in an economy. That is the theory of comparative advantage. Okay. Let's say, for example, if you can even observe this phenomenon even wholesale markets. Let's say you take a textile wholesale market, all the shops will be at one place. Similarly, you take the example of anything, wholesale markets, all the places, like if you take spectacles, all the shops will be at one place. how will that work? Through economies of scale, where there is concentration, like you will find buyers no matter how many shops are there. That is the theory of comparative advantage, where capital will flow to that area, to that sector, because of the efficiency and the advantage they have. This is the central point. Now, in a ideal world, let's say if US is good at manufacturing aircrafts, so let them do that. So trade deficit need not be bad. This is what the theory of comparative advantage is, and this is the argument the writer is also posing here. In this last paragraph, he says that Donald Trump is ignoring this theory of comparative advantage. He's right to a certain extent. Okay, this will lead to loss of trust, and people won't be investing in that economy, is the central argument of the writer there. Okay, fine. Now let us take into consideration the ground level realities. The fact is, Donald Trump is a democratically elected leader. Now, if he is, not making any sense, it is not out of thin air that is producing this kind of arguments, right? There must be some level of acceptance from the leaders, or voters. He makes sense to the voters in US. But why is that happening? When all the economists are saying that in the long run, US will enter into a situation of stagflation, there will be recession, economy loss. When all the negative things are raised or they're flagged, why is that Donald Trump is still making sense? So this is the point where I slightly diverge from the article writer. The reality is, on paper, in theory, you can simply say that may the best one win. But it also depends on various other factors also, right? Let's say, for example, if the voters in Uttar Pradesh are losing their livelihood because of this, democratic election campaign will change. Right? The reason why Donald Trump is making sense is because of the globalized world, workers there are impacted. There is job loss. There is, rising debt. College debt is a very huge issue in US. But trade deficits cannot address, the market forces cannot address these real life problems of the voters there. So a simple fix will be this protectionism for them. So US has a advantage of the leading economy. If you compare India's economy and that of US economy, India is hardly 1/7 of US economy. India cannot even take advantage of any market forces like China has. China can afford to use its monopoly position in manufacturing. They are dumping cheap goods. The other day we discussed, right? So let's say any branded item is there, they're producing it at 1/10 of the cost. Even after the tariffs are imposed, it is still cheap. And they are using this other countries with which US has FTA, and they're rerouting them. So China can have that advantage. Second advantage is, that is also mentioned here. The second advantage that China has is policy distortion. What do I mean by this? Let's say, for example, $1, ideally speaking, should be 5 yuan, the Chinese currency. But they artificially keep it cheap and put it at $1 is equal to 8 yuan. Now what will happen? Obviously, Chinese goods will feel cheaper. Entire market will also accept Chinese goods. Once there is market acceptance, it is easier for people to access Chinese goods, and also for Chinese people it is easier to find newer markets because they already have that word of mouth advantage. Initially Chinese products were bad, but now they're more or less, for entire world is using the Chinese products. So on one hand you are saying that we should stick to the comparative advantage, but the ground level reality is we are not addressing the policy distortions. So this policy distortion of price corrections or exchange rate manipulation, who should handle it ideally? There is no global regulator which will take care of this situation. Ideally, since it is related to trade, we have to take it to WTO. But WTO is virtually not functioning at all. This is one problem. At this point of time, what can we do? Realistically speaking, India can get crushed with this trade war. This is the reality. Like China, we do not have any option. And we are willing to negotiate. You can see here, India did not impose, we did not retaliate with any tariffs on import of cotton. This shows that we are willing to negotiate. Why? Because we do not have that bandwidth to withstand this pressure. Even US cannot continue to impose tariffs because they will lose a lot. Indian imports are very important for US also. But the confidence that Trump has is, let's say, they can divert from, let's say for example, from India they are taking rice. There are so many other countries which will be ready to compensate. Philippines, Thailand, Vietnam, all these countries can actually compensate for the rice that is coming from India. But India does not have such options because we are selling. And we are not good at marketing our products elsewhere. US can go to these countries, but India cannot go to other countries and sell. And this is a wake-up call. On paper, theories like, comparative advantage and arguments will be good only in, on paper. But it is not relevant in reality. And it is not even a bargaining chip in reality. Because we are not deciding, diplomats don't decide on the basis of economic theory. They decide on the basis of ground level reality. And ground level reality is that when there are two sectors getting impacted, even if as a sum together there is a positive gain. For example, we can argue that if market forces focus on this comparative advantage, overall because of the globalization theory we will gain. But that's not how it works. Within the country, some pockets will be impacted very badly. For example, take the case of all this gems, jewelry sector. Do you magically expect them to migrate to the IT sector and pharma sector in a couple of years? For generations together, those sectors are depending on this trade. How will they magically shift from one industry to another? That will change the entire election outcome sometimes, both in the country that is impacted here and even in the US. So for diplomacy, it is important to handle the ground level realities and have a check on the ground level realities. And this is a lesson for us. It is a lesson that we have to focus on improving our diplomatic outreach to different countries. One, we should not depend on, same logic. Don't put all your eggs in a single basket. If something goes wrong, that is the problem. Same logic should also be applied in environment. Biodiversity. Why should we have biodiversity? Because let's say, for example, if one species gets a disease and it gets wiped out, what is the situation of humanity? Diversity is risk mitigation. Nature has its own insurance policy through biodiversity. Similarly, India should also have its own insurance policy for trade through trade diversification. How do we do that? Free trade agreements. For example, 10 years ago, almost 10 to 12 years ago, we have had RCEP. That project was shelved because we did not want cheap milk from New Zealand and Australia to get flooded into our markets. What is this RCEP? Let me take a step back and explain. See, Regional Comprehensive Economic Partnership, it's a mega trade bloc, RCEP. A mega trade bloc of 16 countries. You have all the ASEAN partners, Japan, South Korea, and New Zealand, Australia, Canada. All these people were there, a part of that. Right. So the problem here is, when you take New Zealand and Australia, these are the leading dairy producers in the world, exporters. And the milk they produce is apparently thicker and creamier. And if that milk starts flooding Indian markets, it will be cheap, because the multinational companies there have economies of scale, and that will allow them to produce things at scale. Now in India, we have a cooperative model. For example, Amul. So the income that is generated out of it is redistributed to the farmers. So it is slightly more expensive to the consumer. Because of this fear that dairy industry can be disrupted, and because it is going to be a huge social problem, also an election problem, the governments did not want to go ahead with it. Now, you cannot always have this kind of domestic situations, and you cannot show them as reasons. There must be something that can be done for making this industry efficient, right? So we need to move in that direction. So this requires us to take up all the structural reforms from land, labor, capital allocation, and also the enterprising ability, science and technology, getting back to the basics. 10 years to 12 years, nothing really has changed. And we are back to square one, where we are now competing against the same economies that impacted us back then. Did India grow in that last 10-12 years? Yes, we did. But the same sectors and their vulnerability is still a vulnerability even in the present day. Now is the time for India to relook at this issue and get back to the basics. So, in this article, the writer says that we have to do 3 things. 1, stop retaliating. Don't go for a tit for tat kind of a approach where we go back and impose the tariffs again. And exactly we are doing the same thing. We are not imposing any tariffs. We are willing to negotiate. The second thing is, we are supposed to go for more and more regional trade agreements, free trade agreements like RCEP, etc. Then the writer says that we have to go towards expanding the BRICS. Recently, new members were also added into BRICS. Why? Because World Trade Organization is literally defunct. If we were to make any dent in global trade and actually have some bargaining power, this is one of the most efficient blocks to garner support. Or you don't have an option. Go back to WTO, revive the organization, and make people come forward and sign a pact. That is highly unlikely in the present environment, because deglobalization is the trend. Okay, this is the first article, very important article for the day. So pretty much the same. I don't want to elaborate much. One important point that you can think here is, let's say we are all saying that we have to take advantage of the fact that India is the growing economy, we have to attract investments. There are 2 kinds of investments, FDI and FPI. Hot money means it will just come into our economy through our stock markets, make some money and then leave. This creates instability in Indian economy, because they will move to any place where they will get a better return. So unless and until we go back to the basics, stick to our basics of land reforms, market, all the factor market reforms, you are not going to make money. That is the conclusion here. Clear? Right. You can actually note this point as a case study in your answers. What is this about? National Cybercrime Reporting Portal developed by Indian Cybercrime Coordination Center. So they created a portal called Suspect Registry, which tried to stop a lot of scams. So just use this headline to substantiate your points in cybersecurity. This can be used. So I'm not saying you should definitely note this down, and if you don't note this point down, you're going to miss out. I'm just telling you how to use any article that you see in newspaper with an intent to use it in your exam. Whatever you do, finally you should use it in the exam. Otherwise it's pointless. Clear? Yeah. This one, unified lending interface to be a big boon for AI services. Let me explain this. In an economic activity, let's say, okay, in an economy you have factors of production: land, labor, capital. We are talking about the capital. So if you want to start a business, or if you want to generate value, definitely you agree that this is one of the factor, right? Factors of production. The name itself says factors of production. Capital is one. So if you want some money, there should be someone at the other end. So you are, let's say, you're taking money. There is someone who is giving money. Now let's say if I am asking money, the person who is willing to give that money to me should be in a position to understand if I have the ability to give it back. Credit worthiness, or simply put, do you have the eligibility or the capacity to pay this loan back? Are you willing to give a loan to a person who cannot have any skill or a job? Are you willing to give that kind of a person a loan? No. How do I know that this person is worthy of giving a loan? This is a very big problem for many companies. Right. Now, to solve this problem, what if you have a standardized platform where you can go and check and scrutinize all the data and then see, okay, if this person passes the test, I will give the money, otherwise no. Right? That kind of a platform is ULI, Unified Lending Interface. It is just like UPI, but for lending, for loan activities. Now you might be wondering, we already have agencies like Civil, which will do the background check. But the biggest problem is, even recently, one of the MPs flagged this issue. You don't know how they are doing this calculation. It's completely opaque. There is no transparency. That cannot be the situation here because it's an open platform. Just like how PhonePe, BharatPe, Google Pay, not Google Pay, or Paytm, etc. All these players have a backbone in the name of UPI, where through that it's like a channel through which you can approach the other person. These companies will use the data and curate loan products, and therefore they are called fintech companies. So it's Jandan, Aadhaar, Mobile, Jam Trinity, or I would say plus software or IT plus finance. I would say fintech industry is a 3-parent baby. Jam Trinity, software industry or IT sector, and finance. So for this sector, you need a reliable database, and accessing services like civil will be extremely slow and very expensive. What if you can do it on the go? That is where ULI will come into the picture. And to this, you have an AI power. Like there is an AI engine that will automate a lot of things. This is where the fintech industry will take a huge leap going forward. Access to capital has been one of the major roadblocks for a lot of aspiring entrepreneurs, and this problem will be solved. Okay, that is unified lending interface. That is what it says. Yeah, scramble for fertilizers. Basically, it's like a commentary on the present situation, not really useful for you in the long run for the exam. It's only talking about the present situation. Fairly simple logic. If there is a good monsoon, you will have demand for urea. If there is a bad monsoon, the demand will reduce. That's all you have to know here. And that point is proven through various statistics, which is not really important for you in the long run. Okay, so I'm stopping here. Apart from this, there is an important data pointer in the Hindu, which we'll be discussing as a part of our offline session, and also answer writing part. Okay, that concludes the online session. After a brief pause, we will start the answer writing session. Okay.